But let's get chatting with the management of the company. We've got Mr. Pranab Amin, the Managing Director at Alembic Pharmaceuticals, joining us on the show. Mr. Amin, hi, good afternoon. Good to be speaking with you. And let's talk about your revenues. They've seen strong growth in the quarter gone by, but PAT growth, like I was speaking of, has lagged compared to the top line. What has transpired, and is this pressure on the bottom line expected to persist?
Yeah, absolutely. I think, yes, we had a very robust top line growth. Even the bottom line was good. You have to understand that we're currently making investments in the US branded business. And we had guided at the beginning of the year that we'll have about 100 to 150 basis point hit on the margins in the financial year due to this investment in the branded space in the US, which is a new initiative for us. The hit in this quarter was about 200 basis points, which will gradually reduce as our sales ramps up on the branded specialty side.
Understood. And you are now guiding for Pivya to break even by FY27 end. Can you give us a sense of how the initial response has been on ground and what is driving confidence behind this break-even timeline?
Yeah, so the Alembic Therapeutics division, which is our branded specialty division in the United States, it's in its nascent stage right now. The initial feedback from Pivya has been very good. I think it's a soft launch to say. It's just been one quarter. So I think we're quite confident that this will ramp up. We've just recently added 2 more products to the portfolio as well. So the team will have 3 products that they will detail to the doctors in the similar space. So I think it looks exciting. But it's a branded product, so it'll take a couple of quarters for it to get to its full potential.
Right, and as we speak about this ramp up, Mr. Amin, what could be the impact on margins as you invest more into this segment, since you said that the early response is looking good, but what happens to margins as you ramp up?
So, as I said, what's going to happen? A few things, right? In this quarter, we had, of course, the hit of the branded specialty, which was gradually going to reduce so in the ensuing quarters. And by next year, I think it should be positive. It should have a positive contribution towards the margins. That is one. Second is on the gross margins. Also, we had a few other things which hit the gross margins. One was, I think, with the war in the Middle East and the uncertainty, we had a little higher price of few solvents and few other materials. And one of our lines in the injectable facility was going through a ramp up in capacity. So we had a little bit of a shutdown over there. So those overheads had gone up. So that is a few of the things that led to a margin hit in this quarter.
Okay, we've spoken about US. Now let's talk about your India branded business. The growth here was about 7% higher on a year-on-year basis with ambitions to reach market growth. Are you still on track to achieve this by the end of the year, and what will drive this growth?
So the India business for us is a priority. I think that is something that we need to get to market growth. That is our internal targets that we have taken. We have just made a few changes in the India team with a new leadership coming in the India team. And along with that, we're quite hopeful that by the end of the year, we will start inching closer towards market growth. Within the space that we are in, some of our segments on the specialty side, such as gynecology, gastroenterology, ophthalmology, have done particularly well, and they've grown in double digits.
Okay, and shifting focus about your US generics business, that has also seen tremendous growth on a year-on-year basis. What are your ambitions from this segment going ahead? Any quantifiable growth outlook?
Yeah, so the US generic space has had a fantastic quarter. It grew 49% YOY. We're committed to this business. I think the reasons for the growth is new product launches that we had in the market. We launched about 6 or 7 products in the market, and they've been building up momentum as we go by. We also have a 6-month exclusivity on the Bosulif 100 and 400 mg tablets, which have given a tailwind, and that's been a little interesting for us in the last quarter. Moving forward, we expect another 15 launches in the US in this fiscal year, and that should help the US business continue to grow as well.
Okay, 15 launches. That's something that we're going to be looking out for as the rest of the year pans out. Let's talk about your margins. Your gross margins were pressured this quarter by solvents, product mix, and a maintenance shutdown. How much of this is expected to persist through FY27? Can we say the worst is behind us in terms of GMs?
I think from Q2 onwards, we will see it getting a little more normalized. As I said, couple of things will happen. One, is the US business on the generic side is still looking quite robust. We only had 1 month of sales of Positinib. This second quarter will be a full quarter. And when the ramp up, as the ramp up gradually happens on the branded side in Alembic Therapeutics, we will see the margins getting normalized. So our goal is that by the end of the year, we should have better margins compared to last year.
Okay, better margins. I'm just going to prod you a little bit over there. Can you give me a number? Because you've also raised your FY27 revenue guidance to mid-teens growth. Help us understand what's going to drive this growth trajectory. And of course, coming back to margins, any number that you can share with us?
Yeah, so we've raised the guidance for the US generics business. I think at the start of the year, we had said that about 10 to 12% or so. We're raising it to higher teens for the US business, seeing the way Q1 has panned out and what we see in the ensuing quarters. So we've increased the guidance for that. Of course, that'll have an impact on the margins as well. And with the other businesses all continuing to do well, we should see an improvement in the margins by the end of the year as well.
Understood. We'll be watching out for this and looking forward to our next interaction as well. Mr. Amin, thank you so much for your time. Wonderful to be speaking with you today.